The next speaker is John Kiff from Kiffmeister LLC. We'll talk about CBDCs around the globe. It's now the start of the 20-minute pitches on different projects. And John will start with everything first, the whole world. Welcome, John.
Thanks. 20 minutes to cover the whole world.
You will do that.
Okay.
You can manage.
All right. So first of all, I always like to start with this slide, which I've been producing for since about 2014, 2015. And it shows the cumulative evolution of retail CBDC commencements of research, development, and so on. And so you can see it's ramped up quite nicely, and now it's peaked at around 115 central banks have cumulatively, and I keep saying cumulatively, and you'll see why in a minute, because I add, but I don't subtract. And that's because subtracting it wasn't something I needed to worry about initially. Lots of central banks started up, work on CBDC, and then they just kept on going. But more recently, we've seen cancellations and central banks closing down their CBDC operations. Also, you'll notice that my 115 is a bit lower than John's 140 something, but the reason is that you were counting wholesale CBDC also, I think, and also I think I like to treat currency unions differently. I basically don't count individual countries within currency unions in my count, so that makes quite a bit of a difference. Like how many countries in the European Union? I think 23 or so. So your 23 becomes my one in effect. But I'm going to come to some. Then this data comes from the same source, CBDCtracker.org, which also, in addition to publishing counts, has a great database, which I exploited to have a modified version of this chart, which I'm going to show you later, that counts for cancellations. And when I think about progression through the stages of a CBDC development, I lean on the IMF's so-called 5P approach, which takes you through 5 stages: preparation, proof of concept, prototype, pilots, and production. Preparation, I call it research, but I think the IMF just wanted another P in there, rather than having 1R and 4P approach. And so when I'm going to show you some maps in a minute that take you through the evolution through these different stages. Prototypes I don't count because you can't really see that happen. It's really hard to discern. So I take a 4P approach: research, proof of concept, pilot, and production. So these are all the countries that have, at some point in time, started research. And then these are the ones that have done proof of concepts. And then you've got the ones that have done pilots and then have launched. And so you can see the number decreases as you go along. Now, what you don't see in here is the ones that have popped out. Like you'll see that blue, that's Nigeria. Well, okay, Nigeria has not officially announced that they've canceled the e-Naira, but I think it's well known that they're going to let it die. So that's the reason why I think the approach I've been using up to this point is somewhat flawed. And this is the whole total. So it's quite impressive. Almost every country on this map has got one color or another. And these are the ones that I would say 115 plus 2, and because these are the 2, Ecuador and Finland. They actually started work on CBDC quite a long time ago, before that 2015 or so frame that I mentioned earlier. So first of all, going way back, we got the Finland. They introduced the Avant back in 1992. And what's interesting about that is that it was also it was the first instance of an offline payment system too. So they were doing offline CBDC back in 1992. And then there was Ecuador's Dinero Electronico, which came and went between 2014 and 18. And, basically, they both died off for lack of use. So there's kind of a hint at where maybe I'm going to differ a bit with John. I think John closed his session by saying that CBDC is a live thing that's going to grow. Maybe it will. It'll settle in at some lower level, but what I'm seeing is something quite different, as you'll see in a chart I'll show you later. And then motivations. I like to split motivations into kind of 2 groups for the emerging market and developing economy countries. They're looking to further financial digitalization and inclusion. And also they're looking to reduce physical cash costs and risks, which is a different story from what you'll hear in advanced economy countries, where they'll keep emphasizing that even though we're thinking about offering a CBDC, we're definitely keeping cash around. For some or many emerging market countries, there's quite the opposite. Physical cash is expensive to produce and manage and transport. So they would love it if a CBDC could 100% replace physical cash. And they're also looking to preserve seniors' revenue. That's the revenue that the central bank makes basically by issuing its own currency, which is a liability. Of course, in the balance sheet sense, there's an asset that applies to that liability, and they invest it and they make money. Like, for instance, it's often said that the U.S. banknotes are one of the most productive exports the U.S. has, because everywhere you go in the world, you see these U.S. banknotes, and guess who's earning seniors? It's the Fed. And so many countries want to basically reduce the amount of. It's the same, kind of the same story as reducing currency substitution. You might call it dollarization or euroization. They want to basically, they want people to start using their own currency. And then for advanced economy countries, it's generally the point is to lower the cost of universally accessible currency, digital payments, which can be quite expensive. And the interchange fees and so on digital payments, private digital payments can be quite enormous. In the U.S., there's something like 2%. Every payment you make with a credit or debit card is the system's taking about 2 or 3% out. And so that's one of the motivations for offering a CBDC in advanced economy countries. And also, as we see in Europe, it's about monetary and payments sovereignty too. And then lastly, improving payment system safety and resilience is on everyone's list, and that would include the popular topic of offline CBDC, which I think any CBDC that's offered must be offered with an offline form. That's a necessity, especially if you aspire it to be used in place of cash. Because what's the use of a payment? A payment means that you can't use when you're out when you don't have any connection. And a lot of emerging market countries, that's a really big deal. They just don't count on having connectivity everywhere, anytime. And then these are kind of secondary ones. Some hope that they can use CBDC to improve monetary policy effectiveness, and that could be just by collecting real-time data on what people are spending their money on. But it's also, they might be able to remunerate it, they would have an interest-bearing CBDC, and they could use that interest rate as a monetary policy tool. That'd be specifically interesting to a central bank that runs monetary policy on an interest rate basis. And also this goes back a ways, but when we had to policy rates near zero, the idea was you remunerate a CBDC, and when you got into negative rates, you can basically negatively remunerate it. I think that kind of fizzled out when you start thinking through the implications of a negative yielding asset, and especially if you still have the option of going to cash. If your CBDC is earning a negative interest, you'll just swap out of it into cash, obviously. Also, they're looking at ways as a way of fighting tax evasion, money laundering, and other illicit activity, and so on. And there we're starting to get into some of the territory that might explain why, in many cases, CBDC is losing some of its luster. And because when you say that, you're basically, and also when you talk about the idea of collecting real-time data on spending, you're talking about some form of invasion of privacy, and that kind of irks many people. I think that's the motivation for the anti-CBDC Act in the U.S. It was very much pushed by the Cato Institute, which is pounding the table about the fact that this is like a intrusion on people's privacy. And also, we'll get into this later, but maybe I'll get into it right now. Because you've got distributed and government payments there as one of the options. Well, that also means that usually when you talk about distributed and government payments through CBDC, you're also usually talking about the use of smart contracts or some kind of programmability to make sure that you use that CBDC for what is intended. So if it was meant for, it was meant as a subsidy for grain purchases, you're not supposed to be using it to buy online games and so on. So then that implies some form of control. Again, that's kind of a problem, I think, for many. I have cross-border payments and crossed it out because it's a very aspirational motivation, but it's devilishly hard to do. It's hard enough to do on the wholesale level, but the retail level, we're far away from being able to have sort of universal cross-border payments with any kind of retail instrument. So in terms of design characteristics, everyone's opting for the intermediated one. That's where you have the banks or payment service providers helping the central bank to distribute and manage the platform, because central banks, that's just not a natural thing for them to be doing. They don't have ATMs and branches and so on. And then transaction fees, none of them so far that have been launched or piloted charge transaction fees, but it's more than likely they will at some point. But the idea would be they would be lower than the ones that are being charged by the private sector payment systems. And none are paying interest, as I said. If we had more time, I'd tell you my story about why I think they should be remunerated, but so far they're not, and central banks will say that we don't want it to be remunerated because we want it to be as cash-like as possible. Yeah?
Yes, please. But for the audience online.
That non-paid interest. So are you talking about only the one who already issued CBDC, launched CBDC, or actually my question is there any central banks around the globe that is planning to issue retail CBDC, interest-bearing CBDC?
Yes, there is one, Bank of Israel.
Bank
of Israel has said that they're open to the idea.
Oh, okay.
That's the one that I know of. Other than that, I don't know of any, but and we'll be hearing more from them.
We hear in 7 minutes and 45 seconds about that.
Yeah. Okay. So yeah. So but generally speaking, well, pilots and launches, no, they do not charge or pay interest. And in terms of mitigating disintermediation and run risk, which is a big concern, another reason why remuneration is usually rejected is that you don't want to crowd out commercial bank business. So they usually there'll be limits applied of some sort, often tiered. So it's they've got big limits for small limits for small transactions and bigger limits for larger ones. And it's kind of the tiered higher rates for small holdings and lower interest rates for higher amounts. And then I'm going to skip through a lot of slides here because I'm going to run out of time. But we all know that the central banks have to be compliant with all the AML, CFT, CPF standards. And of course, there's another reason why they have to have some invasion of privacy that irks some potential CBDC holders, and programmability, lots of interest in applications there. And we've seen some of those applied in some of the launches. That Kazakhstan incorporates programmability into many of its I kind of think of it's kind of a siloed CBDC. There's multiple CBDCs with different use cases, and so they often incorporate programmability that enable them to do things like targeted aid payments and so on. And then legal status there, generally CBDCs are designated as legal tender. And then in terms of technology platform choices, it's often missaid that it has to be on a distributed ledger technology platform, but indeed they're not. And because this is the proof in the pudding here that many of the ones that have been launched and piloted are using centralized ledgers. Offline payments, that's very important. I'm not going to stay there for long. Now, but get to the more interesting part. This is the Death Star from Star Wars, and this is what most CBDC aspirers think about when they think of a CBDC. It's a payment instrument for everybody, for everything, and I think that's problematic. And this kind of shows you the different version of that chart I showed you earlier that shows you why it's kind of problematic. Look at the number of launches. I mean, there's hardly any in there. We've only got four launches, and one of them, as I said, has probably dropped out. And then we got a few pilots, and then we got a whole bunch of research and proof of concept central banks. Well, that's sort of interesting, but I think this one is the better one. This is the one that shows you what I call the trajectory of live CBDC efforts. And so you can see that around 2022 or 23 or so, that's kind of the peak time for CBDCs. And when I say live, what I mean is a live CBDC is one that at that point, at the end of that year, that's the number of CBDC efforts that have been launched, piloted, or have had updates to their research. Like they've published something that says we're doing this or that, a white paper or whatever, within the last year of that, or within that last year. And you can see we're down to 34 now. So we've gone from 115 to 34. And so, the trajectory doesn't look very promising. Now, mind you, maybe this is I think this is the Gartner hype cycle, which might predict that maybe there's going to be, we're going to get it right at some point. We're going to get it moving up again. But this comes from the same CBDC tracker database that we're all using. And I just like to make a pitch for the tracker because it's not just a place to go and see the count of CBDC launches and so on. It's a database, and if you send me an email or drop a line, I can give you the whole database. It's a database with detailed information going back to 2015. So it's something that any researcher in CBDC should be latching onto. So why so underwhelming? Well, first of all, jurisdictions' payment systems may already be well served by digital payment instruments. So that makes the retail CBDC rather redundant. That's why I'm a big fan of what I call purpose-bound CBDCs, which I'll talk about in a minute. Also, they have to navigate this knife edge of design challenges. They can't remunerate because they're concerned about bank disintermediation. They reject. They also want the people want cash-like privacy, but they reject that in deference to the financial integrity concerns. In some cases, the central banks skip way too quickly through that 5P process I mentioned earlier. They're often in a hurry to make sure that they can wave their flag and say, like, we're the first central bank in the region to offer a CBDC. And part of that skipping quickly often comes with not involving all the stakeholders. So they don't talk enough to the banks before they launch the pilot. In some cases, that results in the banks being kind of blindsided, and they're not very helpful in actually launching the CBDC. Also, in other cases, they launch before the infrastructure is complete, and that means things like making sure that the point-of-sale devices are in place at vendors. Otherwise, what are people going to do with the CBDC? They can't even spend it. I mean, I personally tried to use a sand dollar wallet in the Bahamas. It worked great in the enclosed environment of the conference where we were given the wallets. But then I tried to use it in Nassau, and everywhere I went, the vendors just kind of like laughed. They said, what is that? I can't use it on my POS device. So there's a case where they went way too quickly. So I'm keen on this idea of purpose-bound CBDC, which is really a CBDC that's aimed particularly at special things. And I think that the Kazakhstan, which you're going to hear more about from John, they're like the poster child for my favorite approach. It's specifically designed to deal with real problems or real challenges and nothing more. It doesn't appear to be what I would call the Starship type of CBDC. I mean, I don't see evidence that it's designed to be used for buying coffees and groceries. More, it seems to be aimed at these specific challenges. And then Bank of Hungary, the pilot, very similar idea, and it was great. Got good pickup. And so, personally, I looked at FPS, fast payment systems, as the major challenger to CBDC. And then when you look at the trajectory, this looks a lot more impressive, I think, than the CBDC one. You've got 130 or so live FPSs, not just pilots and research. So anyways, I'm gonna. This is my other movie reference. In the Field of Dreams, this crazy guy in the middle of nowhere builds this baseball diamond and expects everyone, these old-time baseball players, to come out and play baseball. And so I think some central banks might be dreaming that same dream. If you build it, they will come, or will they? Okay.
Thank you, John. Thank you, John. We have room for, we have an online session. Somebody's joining us online of Bank of Israel, by the way. You mentioned that. This has been mentioned in the project. Maybe one very quick question. Yes, I'm coming. And very quick answer, John, please.
Yeah, that's right.
Thank you very much for your presentation. It was very insightful. In recent years, we have seen a number of CBDCs fail or not been so successful. In IRA, you mentioned one of them, Jamdex, etc., etc. So, in your view, what are the main factors that determine that a central bank digital currency is not successful in the area or doesn't gain traction or enough traction? Thank you.
I think they're all the classic ones I just mentioned. It going too quickly through these. Like I think Nigeria, for instance, they wanted to be the first central bank in Africa to offer us CBDC, so they rushed everything through. They didn't even talk to the banks. And in the case of Jamdex, they not Jam. I know specifically the Bahamas, the Bahamas Sand Dollar. They didn't build out the infrastructure they needed. I think that might be the case with Jamdex too. You can't really launch a CBDC until you've got sufficient merchants and so on that will be able to actually, take your CBDC. Those are the major ones I would pick on.
Thank you, John.